This is Office Talk with Annette Stepanian. Hi everyone, Annette here, and I'm back with another episode of Office Talk. In this episode, I'm talking to my good friend Amy Northard, who is a CPA for creatives and entrepreneurs. And what I love about her is she makes all that really complicated tax stuff really easy to understand. So you're going to hear a little bit about her story and how she came to what she does today, but I'm also going to be asking her a lot of questions that we all have as business owners, like what are 1099s and do I need to be issuing them? Or what really qualifies as a deduction? You know, all those Starbucks coffees that I buy when I'm working out of a Starbucks, do those qualify as a deduction? Well, you're going to find out all the answers to those questions in this episode. And I want to remind you that Amy and I are actually teaming up and doing a joint webinar on November 17th all about hiring. So we're going to go into both the legal and tax obligations when you hire your first employee. If you want to sign up for that, head on over to AnnetteStepanian.com/free webinars. Also, make sure to be on my list because next week I'm going to be doing some pretty big giveaways and I don't want you to miss out. So with that said, let's go to the show. Hi, Amy. Thank you so much for being here today.
You're welcome. Thanks for having me.
I remember the first time we talked, I think I had sent you an email. I was like, a lawyer and a CPA walk into a bar. Because I think lawyers and CPAs oftentimes get a bad rep. You know, we're kind of perceived as really stuffy and boring and kind of strict. But I think you and I are not like that. And that's why we're friends. You're an accountant for creatives and entrepreneurs, and that's what you do today. But can you tell our audience a little bit more about what you do and kind of how you got to doing what you do today?
Sure. So a little bit about what I do is I work with small creative business owners figuring out their taxes, whether it's sales tax, income tax, that kind of stuff. We figure it out, make it less stressful, and then I also help getting bookkeeping systems in place. So, from the very basics of setting up separate business accounts to walking through people through the process of what they need to do on a monthly basis of taking care of their own bookkeeping. A little bit about how I got to this place. So I'll back up all the way to high school because it started way back then. I had to pick electives for high school. And down in my heart, I wanted to take jewelry making. I just thought that sounded so fun. And I told my mom that's what I wanted to do. But unfortunately, or fortunately, my dad really wanted me to take something to him that was a little bit more practical. So I ended up taking accounting classes instead of jewelry classes as my elective. And it turns out I liked it and that I was pretty good at it. So when I had to figure out what I wanted to do for college, the biggest thing that jumped out at me was doing accounting as my major. And of course, my dad was like fully behind that decision. And it was kind of around the time of the market crashing. And so I went with what I felt like was going to be a super stable job. And so I went in, did the whole plan that my dad had lined up for me, graduated with all the credits I needed to take the CPA exam. I started working at a CPA firm right after college while I was studying for the exam. And then later, once I passed it, is kind of when I had that quarter life crisis. And I was like, oh my gosh, I can't be miserable like the people that I'm working with. It just did not seem like a right fit for me. So the bummer thing was that I had just put all this work into getting my CPA license, going through college and all of that work, and I didn't want to toss it away. So I was trying to figure out, should I move to a different company and maybe I would just like working in a different environment, or wouldn't it be cool if I started my own business? And I never during that time, I didn't really think that was going to be a possibility until my boyfriend at the time, who's now my husband, he told me about a part-time job. and it was completely not accounting related at all. It was 30 hours a week, so I could still get health insurance and have some time to work on my business. When I told my dad I was going to be leaving my accounting job and moving into an administrative non-accounting job, he kind of freaked out. But I told him, I said, Dad, you just got to trust me on this. I have a good feeling about it. So he let me do my thing, and it ended up working out really well. My clients grew so fast that I ended up, after about a year and a half, leaving that part-time job so that I could go full-time into my business because I just didn't have enough hours in the day to do both.
That's a good problem to have.
Exactly, yeah. That's kind of what led me to, or the path that I took to where I am now. And in terms of the creative industry that I chose, I picked it really because I personally love doing a little bit more crafty or creative things, and love being inspired by the clients that I work with. So that's why I went into this industry.
It's funny. I mean, so many times while you were talking, I was like, me too, me too. Other than the part that you had accounting and jewelry making classes in high school, I don't think my high school offered that. I don't know where you went to school, but that's awesome.
Uh-huh.
But yeah, I mean, you know my story. I totally relate. You know, you pick this profession and, you know, partly because it gives you this sense of security, like, okay, it's a very stable profession. You go
Mm-hmm.
into it and then you realize, uh-oh, this wasn't what I thought it was going to be. And then you're like, crap, like I've just invested all this time, this resources, student loans, all that, develop this asset. And you're like, but I don't want it. So
Yeah.
it's a bit of a process. So, you know, my dad's a CPA, so I grew up kind of seeing how important and integral the accounting, money management part of things are in running a business. Can you talk to us about what are some of the common things that entrepreneurs need to be thinking about when they are starting and growing their businesses from like a tax perspective? And I know that's a very broad question, but kind
Yeah,
of
if you have a
like,
couple hours.
yeah, yeah, we might need to do this in a few parts. But like, if you're at a cocktail party and you're like, I only have, you know, 2 or 3 things that I can share with somebody, you know, what are some of those things that kind of come up?
All right. Well, the biggest thing would be creating separate bank accounts and keeping things separate. Whether you're a sole proprietor, an LLC, or an S corporation, that is just something that it's easy to keep putting off because you don't feel like your business is big enough or you don't feel like you have enough transactions. But I see it really often, and when you have everything mixed, it just makes the bookkeeping side of things so much more of a hassle. If you're doing bookkeeping and you're manually trying to pull out entries or transactions from your personal account where everything's jumbled, there's a really good chance that you could miss something. And I actually had an example of a client who missed a transaction of about $12,000. And she was freaking out because she was wondering why her taxes were so high. And so she went back and looked at her transactions and realized she had forgotten to include that. So that's one huge thing I always start off with, is getting everything separate. And along that line, I was having a conversation with a lady and she said, well, what do I do with my personal transactions that I don't necessarily like want my husband seeing how much I spend on stuff? And I was like, oh girl, I am so right there with you. Cause like, I don't want my husband to see how much I spend at Anthropology. So maybe one time I put it on my business credit card and treat it like I'm paying myself.
Uh-huh.
And so I was like, I totally feel you. I understand where you're coming from. If you need to do that, get a separate personal credit card to deal with that and then pay off your credit card. But that's just an example. And I think more people think that way than we would admit. You know, we buy things with our business PayPal and we treat it like we're just paying ourselves. And I even admit to doing that as well. You know, it's easy to do. You generally have money in the account or have your PayPal linked to an account with funds in it. And it's just easier to type in your PayPal information than getting up and getting your credit card.
Yeah.
That's one thing, and I think a lot of us can kind of relate to.
Yeah, I love just how honest she was. The other day I was buying wallpaper and I was like, Amy, can I take this as a deduction?
Yes.
Yeah, sure. So let's say we have our account set up and we have all of our receipts and, deductions and all that. Like, can you walk us through how we should be thinking about organizing the expenses that we're incurring in our business and then potentially categorizing them in a way that we can then hopefully use them as deductions?
Yeah, so the biggest thing is just to choose a system for tracking your deductions that you will use on a regular basis. A lot of people will jump right into QuickBooks because they hear that that's the thing that you use for your business bookkeeping. But QuickBooks can be overwhelming. So what happens is they've bought it. They might have bought a year-long subscription, but now they don't know how to use it. Something's happening and transactions are duplicated or whatever, and it overwhelms them, so they don't use it, and then it's the end of the year. So even if you just have to open up an Excel spreadsheet and start dumping in your transactions, having an easy process that you can follow where you could just go into the Excel sheet, type in a category for each of your expenses, and then at the end of the year, you can sort by the category, and then you know how much you spent for each thing. Oh, sorry, I just had a brain fart.
No, it's okay.
Where was I going with that? Okay. So don't be freaked out by giving things categories. The IRS doesn't really care a whole lot about what you call something. They more are concerned about whether you are underreporting your income or overreporting your expenses. So don't be too torn up about whether you call something a supply or you call it a prop, office expense. The IRS is not going to spend their time auditing you just to change the name of an expense. So just keep that in mind because that is another thing that can hold people up when they're working on their bookkeeping.
Okay. But what kind of things can we take as deductions for those who maybe are not up to speed on that?
If you think through what you use with your business on a daily or monthly basis, so online subscriptions to things like Dropbox, any other online monthly or annual subscription that you're paying that helps run your business. If you meet with a client and buy coffee, you can deduct that. The biggest thing is that you can't deduct in that scenario is if you just go to Starbucks to do some work and you get coffee.
So that can't be perceived as office rent because you're just kidding.
I've had that question before.
Really?
Yeah, because you're buying coffee to use their internet, you know?
Yeah, I was just thinking about that the other day. I was like totally kidding, but I was like, that's kind of like paying rent because I'm buying the coffee so I could sit there to do my work. But anyway, so
I mean, you could try to make the case. It just depends on on how much you want to try to make your case to the IRS. But generally speaking, you don't want to deduct any meals or entertainment that you didn't have while you are with a client unless you're traveling on a trip outside of your hometown.
mm-hmm.
Let's see what else. You can deduct office decor. So if you were buying your wallpaper for your office, you can deduct that. And the big thing that you can't deduct that seems like common sense is clothing. So if you're a photographer or a wedding planner and you buy special shoes and like a special all black outfit to shoot your weddings or to manage the weddings, that kind of stuff can be worn outside of your of the wedding that you're putting on or photographing. So the IRS says you can't deduct that. Same goes for if you're speaking at a conference and you want to buy a cute new outfit. That stuff, unfortunately, also can't be deducted.
So that's a really good point. So what are some of the things you did mention it earlier, like what are some of the things that might trip up the IRS where you're like, might kind of raise some flags with them when you're taking these deductions or you're reporting your income. Do you have any insight on that? Or kind of what are the things we should be careful about?
Yeah, I mean, the big thing with the income is just make sure that you're reporting all of it. So especially if you have a 1099 for it, because if you don't report that income, you'll automatically get a notice from the IRS. But and also include any other income that you might receive as a check, or like if you're a photographer and photographing personal, like individuals, not businesses, they won't issue you a 1099. So on the income side, just make sure you're reporting everything honestly. From a deduction standpoint, one big thing, home offices used to be a red flag in general, but now there's so many of us who have home offices that they can't use that as a red flag anymore. But what they'll come to you and say, it looks a little funny that half of your house or half of your apartment is used for business purposes. And I've seen that sometimes. Sometimes people will tell me that 50% of their square footage is for their home office. Uh-huh. So that's just one thing. Keep it reasonable. If you have a 10 by 10 office, report what it actually is and not all of the areas of your home that you work from, like your couch.
I can't put that in the square footage. Okay.
Yeah. Leave the couch out, leave the kitchen table out, only the square footage that you only use for business.
Oh my God, you're hilarious, Amy. See, and people think lawyers and CPAs aren't funny.
Okay. Most of them aren't, but that's the key.
So, okay, great. So that's really, I mean, you got to be reasonable and you got to know where those things are and those red flags are that, I don't know, they might come audit you. And that's why working with a CPA is so great because they know how to navigate that and they know where those little like tripwires are. Oh, one more question about the deduction. What about your cell phone? Because I think most of us use it both for work and personal. How does that work?
Mm-hmm. So cell phones are kind of in that little fun gray area. The best way to calculate how much you use it for business is a way that you can provide proof to the IRS should they ever question you. So what I recommend for people to do is pull 3 months of phone records, print them off, go through and highlight what was a business call, what was a personal call, and add up your total business minute divided by your overall total minutes used for that month. You'll want to take an average of whatever that business percentage is, and then that gives you an idea of how much you use your phone's calling plan for business purposes. So let's say that you add up all your business minutes, divide by the total minutes that you've used, and that comes out to 40%. You would be able to multiply 40% times your calling plan cost, and that's your deduction. Where it gets a little gray is, I would say, more on the data side of things, because you can't do that method with your data. So you have kind of two camps of people. One is that I'll estimate how much I use my data for business, and then I'll just take that percentage of the data expense, or I will just expense the whole thing because I have to have data no matter what on my phone to run my business. In that case, then you would expense the entire cost instead of just a portion.
Yeah, I never thought about taking the actual minutes and
it's tedious.
Yeah.
And most people don't do it, but it will give you at least a little bit of sense that you have some backup to what you're claiming. If you're a little bit nervous about that kind of thing, it just gives you a little bit of sense of security in terms of that.
Yeah. And how often do you see the IRS auditing folks?
I mean, I haven't had any clients in the past 4 years get a full out audit where the IRS wants to see all of the receipts and documentation for things. I do fairly regularly see cases where people will forget to report income that was on a 1099. So like I mentioned earlier, the IRS has notice of that 1099. And if you send your tax return in and there's that income's not on there, it doesn't match up. So then automatically the IRS will send out a letter saying you owe this amount of tax.
And And are there penalties associated with that, or is it just a tax?
Usually they will add interest and underpayment penalties for that. And it's not huge. I've never seen like a huge penalty, but no one wants to pay more tax than they have to.
Yeah. Speaking of 1099s, can you explain what those are? Because I know I see a lot of questions coming up in different groups and whatnot. Just people are so confused about they are, when they need to give one, do they need to get one? Can you just give us a quick recap of what that is all about?
Yeah, so I think 1099s are kind of that thing that a lot of small businesses know is out there, but when it comes to them having to provide them, they just ignore it and hope it doesn't bite them in the butt later. But what 1099s are is a document that you as a business owner would fill out if you paid a business $600 or more for a service. Annette, if I paid you $600 or more this year for legal help, then I would issue you a 1099. You would get a copy and the IRS would get a copy. And then the IRS, like I just said, is going to be waiting for you to report that on your tax return. And then when you're receiving a 1099, you're on the other end of it. That's just your cue or your reminder to make sure that you report that income on your tax return. And there's my dog.
What's your dog's name?
She's Lily, and the mailman just came to our home.
So yeah, hashtag real life.
Yes.
So just a clarification for the 1099. So if you are a business that hires another business to do work for you, you pay them more than $600. Do you have to give them to all businesses that you've hired? Is there any distinction, or is as long as you pay more than $600, you have to issue a 1099?
To be on the safe side, it's good to just make it a practice to issue to everybody. Big corporations, S corporations, C corporations, they aren't required to receive one. So if you find out through issuing a W9 form, which is just like a information collection form, if they have it checked that they're a C corporation or an S corporation, then they don't need to receive a 1099.
Okay. So if I go ahead and buy more than $600 worth of Facebook ads, I don't need to issue Facebook a 1099, obviously.
Exactly.
Okay, but let's say I buy some sort of software where the company is not a C corp or an S corp. They're, let's say, an LLC. Do I still need, and I paid more than $600 for the software? Do I still need to issue them a 1099?
Software would be more like a product that you're buying,
Okay.
So you wouldn't need to do it for software. But like, let's say you paid a web designer to do a website. You're getting a website, but you're paying them for their services. So
more for service-based work that you pay for. Okay, that totally makes sense. Okay, yeah, because I know that's something that people have a lot of questions about, as they should, because sometimes it's super confusing for no reason.
Yeah.
Cool. So then another question that comes up is, everybody wants to become an LLC when they first start doing business. And I normally say, depending on the line of work that you're in and, some other questions that I ask my clients, you might want to hold off and, maybe run it as a sole proprietor for a little bit and then become an LLC. But assuming you've made the decision, you're going to become an LLC, people always want to know, like, well, how do I pay myself? Because technically the LLC is this different entity and you're kind of working for the LLC, but reality is nothing has really changed in your life. You're probably still working on the couch, You maybe got a certificate from the Secretary of State that says that you're an LLC, but nothing feels different, right? So what kind of advice do you have when people are like, okay, I'm an LLC, how should I pay myself now?
I love this question because it's not as hard as people think it's going to be. As an LLC, you can just write yourself out a check, or you can send yourself a bank transfer. What you want to steer clear of is using your business funds to make personal purchases directly. So I've had a lot of people that they say, my business account is the only one that had funds in it. So I was out at Target and I needed to buy something for myself. So I just used my business card and it's like I just paid myself that amount of money. That's what you really need to steer clear of as an LLC. What changes is when you become an S corporation, which is kind of like the next level up from an LLC. The S corporation is when you have to start doing a payroll for yourself. So it's like you're an employee of the company. You would have taxes taken out and you would get a W-2 at the end of the year. So it definitely doesn't change a whole lot between sole proprietor and LLC, but a big change between LLC and S corporation.
And I don't know if I've mentioned this to you, but I started implementing the Profit First. Have you heard of that book?
Oh, yeah, I love that.
Oh my gosh, I just did this about a month or two ago. And I'll link it up in the show notes about like creating all the different accounts. You have these like different buckets, like for income, for operating expenses, for taxes, for profit. And like you do these distributions to yourself every 2 weeks. And you have these formulas you can use, whatever. It took a little while to get my head wrapped up around it. But then once I got it, I was like, I love this because now I feel like I'm actually paying myself and like everything's kind of attended to, and it's not just coming out of this one big account.
Yeah, and I love the way they have it set up where you're putting that money into that profit bucket like straight off the top. So you're pretty much always guaranteed to make money with your business, and you can only spend the money that you put into your expense bucket, which is something that I see a lot of people going into debt with their businesses. And if they could flip the thinking around to that style of thinking where you have this limited amount that you can spend, I think a lot of people would be making more money with their business instead of essentially paying to run their business all the time.
Yeah. And that's what I love about it is because it shows you the truth behind your numbers. Because let's say like you have one really good month and let's say you made $10,000 one month, right? And you look at your bank account and let's say if it's all in one account, you're like, wow, I've made so much. I'm going to go take this course and I'm going to like, I don't know, invest in Facebook ads, or I'm going to whatever, go buy myself something from Anthropology. But like it's kind of like a false conclusion because that's just that 1 month versus, maybe the month before you'd only made $2,000.
And one thing I will mention is that the first like half of that book is super, super awesome, but don't feel like you need to implement every single thing later into the chapters.
Yeah.
Because he gets hardcore about certain systems that he has in place. And I think that the best thing about that book is towards the beginning where they talk about those different buckets. So don't get overwhelmed if you do read the book. It's awesome, but you can just like read half.
Yeah. So moving on, I just wanted to find out what can people expect when they start working with a CPA like yourself?
I think that the biggest thing is just having a support system for you. A lot of us get into starting our business and there's just so much to learn and research. And you hear different things in Facebook groups about what you should be doing and they kind of counteract each other. So having someone that you can reach out to with questions that can support you throughout the year, I think is the best thing about working with the CPA. I work with people digitally all over the US. We're not sending papers back and forth. We're able to work completely online, and it's really awesome because it speeds up the process, and I think it just makes it a lot more efficient. A lot of people end up coming to me because they say their current accountant never responded to them, or they didn't hear back for a really long time. And I'm kind of amazed at how many people come to me saying that their last accountant wasn't responsive. And that's the biggest thing for me, is getting to emails within a day or two and not leaving people hanging. Because usually, honestly, if people are emailing me with questions, it's not something they can wait a week or a month to hear back on. So just know that not all accountants are the same, like we've been talking about. And if you've had a bad experience with one, try working with a different one. We're all different.
Yeah, people will ask me like, well, how do I know how to work with a lawyer? Like, what should I be looking for? And to me, the biggest thing is you're looking for somebody who's going to be part of your team. Like you said, like they're your support system. They're coming in to play a certain role within your business. So you want to make sure there's that good fit, and you want to look at people's experience, and just like any other person. I mean, if you're hiring a babysitter, you're going to look for references. You're going to see, does this person kind of fit into our family? When you're hiring a CPA, a lawyer, a doctor, whatever it might be.
Yeah, and asking around and seeing like who your friends are using, just like you would do for a babysitter or a doctor. who are they raving about, that's a good place to start looking.
So another question that comes up a lot that I think creates a lot of confusion is the issue of quarterly taxes. Can you give us an overview of what that is and what we need to know?
Sure. So the best way that I describe what quarterly taxes are is think about it like you're making a deposit towards your annual income taxes. So those are the ones that are due April 15th every year. Most of us have state taxes that are due around the same time as well. So by doing quarterly taxes, you're kind of estimating how much you owe for the year, and then you pay in a chunk of it each quarter. If you underpay, then you'll obviously still owe with your tax return. But if you overpay, the IRS will refund every dollar that you overpaid. So you're not going to be losing money if you send in too much. And the biggest thing that I recommend for people to do is to set aside into maybe a separate savings account so that it's out of sight and out of mind those funds that you want to set aside for paying in your taxes. So for example, for the first quarter, at the end of January, maybe you look and see what your profit was for the month, and then move over into your special savings account about 30% of that. And it varies how much you should set aside, but that 30% is usually a good starting point. And then when it's time to send in your taxes for the quarter, you can pull the money from that account and send it in.
And is that 30% of your revenue or your profit?
That would be the profit. So it's the income left after you take out all of your expenses.
Okay, cool. And then what happens if you don't pay your quarterly taxes and you wait until the, April 15th to pay? Do you get in trouble?
Good question. No. A lot of people come freaking out to me because they're like, oh, I've heard that I was supposed to be paying quarterly taxes and I haven't been. But the good news is that you'll never receive an IRS or state notice if you skipped your quarterly income taxes. Keep in mind, this is different than like quarterly sales tax. So you will definitely get a notice if you skip quarterly sales tax. On the income tax front, it's not required. The thing where they get you is if you underpaid, they can charge you underpayment penalties and interest on the difference. So it's not a huge amount, and I can't tell you the percentage off the top of my head, but it's so small that a good amount of people just elect to pay that and not deal with sending in quarterly tax payments.
Oh, really? So they'll just not pay until April 15th, and then they'll be subject possibly to, they will be subject to an underpayment penalty, and they'll just pay the penalty. Okay.
Yeah, I wouldn't recommend that because we don't need to be paying more than we should, but it is an option. So if you fall into that bucket, just know that nothing more bad than getting a little penalty is going to happen to you.
Yeah, for those of us who are like straight A students and hated getting like an A-, that might like really suck. But I think for the rest of the world, it probably feels like whatever. We'll just move on. And I think I'm glad you said that because there's a transition, right? As most of us are starting and we're trying to develop our businesses, we're figuring out all of this stuff, this process where we're going to learn, we're going to maybe make mistakes, maybe not pay our quarterly taxes, whatever. But then once you figure it out, once you work with someone like Amy who will set you straight, make sure you're meeting all of your obligations from a tax perspective, then you just have a system and it's about just executing on that. I want to know, a question that I ask all of my guests is, one thing I know for sure is, and I ask you to fill in the blank.
So I would say one thing I know for sure is that it's just so important not to stay stuck doing something because it's the easy thing to do. So for us, it would have probably been the easy thing to do just to continue on with our boring jobs and not make a change. But making that difficult change seriously changed my life for the better.
I love that. I could totally drink to that. Thank you, Amy, so much for being here.
Thank you.
So there you go. I hope this episode helped clear up some of that confusion that surrounds taxes and what we have to do as a business owner. If you want to learn more about Amy and get in touch with her, you can get all of her contact information over in the show notes, available at AnnetteStepanian.com/podcast/12. In the show notes, you'll also find information about how to register for our joint webinar all about hiring. Make sure to save your seat because it'll be here before we know it. Thank you so much for being here, and I can't wait to talk to you later.